Concerning Coinbase, we are aware that matters are grave. Current conditions in the cryptocurrency sector are really mind-boggling. The bulls and bears are engaged in a tremendous tug-of-war. Just now, the Ethereum ETF got the green light. Not to mention how terrible the timing is. Things are getting crazy. So Shiba Inu investors are sounding the alarm. There appears to be just one option to rescue your investments, and they are in a state of panic. I don't understand, though. Okay, I'll try to clarify. Important notice, the Shiba Inu market has been anything but bullish as of late. The asset has been quite unstable, unable to maintain a price above the threshold of local support. The departure of whales from the market is a clear indication that it is not yet prepared for a growth phase, which is contributing to the current decline. The Shiba Inu community has been hoping for a reversal, so this news is upsetting for them. The scenario has now become more complicated as the approval of an Ethereum ETF has sent shockwaves across the cryptocurrency industry. The acceptance of the ETF was a major step forward, so there was good reason to be excited. For the first time ever, an Ethereum ETF is available to buy and sell. The unexpected result was that whales' interest in Shiba Inu spiked, and they tried to drive up its price. Nevertheless, Shiba Inu has encountered difficulties in sustaining its pace, which is a reflection of the difficulties it encounters in the present market. Recently, Shiba Inu has been subject to heavy selling, causing its price to fall below important support zones. Its fall demonstrates that it was unable to sustain its position above a certain level. Concurrently, there has been a marked decline in significant transactions, suggesting that major holders are not as active. The future of Shiba Inu's market presence seems bleak due to the aforementioned causes. As an example, 341 big transactions occurred last week, but just 82 in the previous 24 hours. Big holders or whales are cutting back on their holdings, which means there is less buying pressure to keep prices high. Even if there were 82 major transactions, it's still 4 times lower than the high. You can really see the decline. It's like if you go from observing a crowded street to one with hardly any people at all. It is difficult to overlook the difference, which is substantial. Concurrently, there is a substantial amount. There were 3.36 trillion Shiba Inu in transactions in the last 24 hours, down from 5.7 trillion Shiba Inu at the week's top. Big holdings may be cooling off a bit, but this still points to continued bearishness. This is a really intriguing turn of events. Anxiety in the market was warranted following the approval of the Ethereum ETF only 2 days ago. So the thrill has gone. Despite this good news, why did the price of Shiba Inu drop so drastically? An enigmatic new development. Here, though, is a solid breakdown of the current situation and what's to come. Despite the approval of Ethereum efforts, trading has not yet begun. Among the many stages involved is getting the market infrastructure ready for trading and establishing the ETF to comply with regulations. The entire market impact of the ETF approval will not be apparent until these preparations are finalized and trading formally commences. This could be the reason why the Shiba Inu pricing hasn't responded positively to all the hype just yet. It seems like a lot of folks were thinking this. They appear to be confused on something crucial, though. Does Grayscale ring a bell? Someone had to have dumped Bitcoin worth hundreds of millions of dollars, and it was them. The approval of ETFs led to numerous market crashes. A little analysis follows. Discounts of roughly 48% were available to Grayscale investors in early 2023 when they purchased Bitcoin. Many investors dumped their Bitcoin holdings the moment Grayscale's Bitcoin was transformed into an ETF due to the steep discount. However, in early 2023, investors might purchase Ethereum at a steep discount of over 60% through the Ethereum ETF. Upon the launch of ETF trading, many Ethereum ETF investors will likely cash out at this steep discount. This is because the rationale is simple. They find it incredibly appealing since they can buy at a bargain and then sell at market value, locking in significant gains. Therefore, it's possible that the whales aren't ready to invest just yet. Why? Because they think prices will go down even more. And that's only scratching the surface. There are now Bitcoin and Ethereum exchange-traded funds ETFs trading in Hong Kong, and the difference in flows is obvious. We can analyze existing data to predict future patterns, which is why this strategy is wise. Compared to Ethereum ETFs, which have only received $17 million in total inflows, Hong Kong Bitcoin ETFs have received $105 million. For Bitcoin, that amounts to about 16% of all transactions. Not only that, 10% of all Bitcoin ETF inflows are shown on S Investors, the largest derivatives marketplace for you. This suggests that Ethereum is receiving just 11% of the interest, suggesting that the majority of investors are concentrating on Bitcoin rather than Ethereum. This discrepancy shows that Ethereum's volume is far lower than Bitcoin's, despite high expectations. Prices keep falling and whales aren't buying, which might be due to this mismatch. Would you, as a whale, engage in a market when actual results are so disappointing compared to expectations? Everything is illogical. The present lack of investment from significant investors could be explained by their cautious approach, but the unexpected revelation regarding the Ethereum ETF isn't the only thing that has thrown Shiba Inu for a loop. Coinbase is involved, and there's more to the story. Shiba Inu futures have been introduced by Coinbase for its institutional customers outside of the US, according to recent announcements. As expected, this revelation plunged the public into a panic. This feature was already available on Coinbase. Nevertheless, it seems that Coinbase had been limiting a portion of its investment strategies to the American market. What this implies is that Coinbase has been blocking some users from using specific functionalities. Some people started spreading criticism towards Coinbase after this finding. When put into context, just pretend you've been a paying customer of a service for some time and think you've mastered all of its functions. You might have been feeling left out or unfairly treated when you discovered that some functions were only accessible to specific people. All of a sudden, people appear to be dissatisfied with this finding due to their perception of being misled or left out of some features. They believe that all users could easily access them. Users are left feeling disappointed and frustrated because it makes them wonder about the fairness and honesty of services like Coinbase. And while it's probable that regulatory worries are the reason Coinbase has limited this feature, regulators frequently impose strict penalties on investors who engage in leverage trading, which is particularly dangerous in the Bitcoin market. Limitations imposed to safeguard customers from possible damage. In order to comply with regulations and reduce risk, Coinbase may be limiting users' access to services that allow them to trade with leverage, the dangers of taking unnecessary risks in investments, and this is where things start to heat up. Regulators' stances on leverage trading are perplexing given their tolerance for gambling and other potentially risky or speculative activity. Concerns regarding regulatory objectives and risk assessments are prompted by this disparity. Some could say that leverage trading is just like gambling in that it encourages risky behavior and the potential for huge losses. Though it's not always a game of chance, leverage trading does involve some degree of risk. Beyond the losses of individuals, the financial markets might have wider economic ramifications as a result of leverage trading. Regulators' tolerance of gambling while limiting leverage trading may seem contradictory to some on an ethical level. Both pursuits, they may say, necessitate a high degree of recklessness and pose risks to both people and society at large. This lack of cohesion among regulatory frameworks raises ethical concerns since it favors some actions above others without providing adequate explanations or taking their possible effects into account. I digress. An immediate 51% increase in Shiba Inu volume followed the announcement that Coinbase will be enabling this new capability. There has been a dramatic uptick in trade involving Shiba Inus, as this huge increase shows. The Ethereum ETF scenario has added to the general market instability, which may be leaving some people feeling confused and overwhelmed. Anxieties might set in when the future is unclear, unease with returning to their investments after taking a step back to wait for more definitive signs in the market. So what are your thoughts on the matter? Leave a comment below. Your comment would be greatly appreciated. If you're interested in learning more, just click on one of the videos displayed. We have reached the final segment of this video. Please like the video and share your thoughts in the comments area if you found it entertaining regarding